Kristen, it's all on you, right?
All right. So just real quick introduction. My name is Kristen Bradley. I'm the president and mortgage broker of A&K Mortgage. You can find me on Facebook, Instagram, all that good stuff there. I try and have a little bit of a community. So I am an independent mortgage broker. I work with about 18 different lenders, nationwide lenders. So these will be actual independent investors as well as other larger institutions. Advantages of working with me is that I kind of have access to a lot of programs that most people necessarily don't, and I have pretty good pricing because I'm on the wholesale side of the mortgage industry. So I'm able to offer more competitive rates and less cost for your buyers. So what I'm gonna kind of do is just kind of go through my slide here real quick. And then just open it up for everybody to ask questions. But just a little more about my background. I am a 20-year accountant. I have my MBA from Texas A&M, worked in corporate environment up until June of 2020, when I was officially laid off and decided, hey, I can do all this. For hard as I'm working for all these corporations and handling several $billion portfolios, I can do it for myself. So here I am 100%. And so again, I worked in truly just accounting and financial planning, got into the mortgage side because I hated people telling me no. I'm a pretty candid, upfront, open person. So any situation or scenario that most buyers are going to encounter, especially ones that are first-time buyers or ones that have had financial hardships, I've experienced it and I know a lot about it. I got into it really because I wanted to be able to help other people, because all I needed was a loan officer to at least take the time and listen and understand what my situation was. I've been turned down for several mortgages. So again, this is after I used to work in oil and gas, downturn in the industry, got laid off twice in a 3-month span. Filed bankruptcy. They relocated me fully from the Dallas area. So I had ended up having to file bankruptcy, and I ended up with a foreclosure. I reestablished everything, and I'm like, hey, what the heck am I supposed to do? I'm a single parent of 3. So, hey, anybody who reaches out to me, just know that I am always on go. So I actually functionally fully run 2 companies. So A&K Mortgage. So again, that's my mortgage brokerage, but I've also have an income tax and bookkeeping company. I've been in business over 11 years with that one. Have a pretty strong following and client base behind there. So like I say, if it's anything to do with the number, I can help with it. And that is one of the key advantages that I'm able to bring to my borrowers, as well as hopefully your future clients as well. Because any of them with tax debt issues, any of them have questions on filing tax returns or needing tax returns filed, I'm able to do that, right in-house. You're not having to worry about going to, hey, let me pay another person to do X, Y, and Z. Needing financial statements, I do that as well. So I kind of do specialize a little bit more on the self-employed borrowers. I love entrepreneurs. So I guess that's it overall for as far as I go. So again, I'll just run through kind of the advantages of working with a independent mortgage expert. And again, my name is Kristen Bradley. Again, President, CEO, Senior Loan Officer of A&K Mortgage. I can be found online. Again, website is www.akmortgage.net. You can call me and reach me toll free. I'm also licensed in the state of Texas as well as Mississippi. And numbers there. So 5 top reasons or good points of working with a mortgage broker is one is going to definitely be speed and service. Because I actually have very consistent turn times. Normally, I'm able to get two-day initial approval, meaning that, hey, once I submit that loan in there, you don't have to wait 6-7 days for to get at least a conditional approval on, hey, what does my borrower need, or even if we're going to make it that far in the loan process. After we get that conditional approval, I'm able to get them conditional, those conditions cleared within 12 to 15 days. Also, I'm able to close loan with that, being able to close most loans within, so I will say this, and again, that is probably going to be more for elite buyers. So if anybody has 700 FICO score, a conventional loan, definitely get them closed within 12 days or less. And like I say, I actually have a portal. I'll give you access to that one. The website is a link. Send your borrowers to there. I'm able to upload and import their file. They're able to e-sign. Everything's going to get submitted to underwriting at that moment. Get into setup. You get your approved conditions back. I'm actually able to send out the initial condition, the initial CD within those first 2 days. So that actually starts your cooling period. So that's why it opens us up to really be able to close a whole lot sooner. Once I get all of, get every conditions in within that 12, most of the time it doesn't even take me that long, depending on, again, the loan type. Get your CDC, and we are on the final doc. So that is how we're able to close within 12 days. And it's really because I'm working with one of the industry leaders, and they actually just went public last month on the wholesale market. And the key driver there is technology. If you think about it and keep in mind that most buyers now in the market are millennials. 60% of those millennials are taking up the housing market from new purchases. And they are wanting quick, fast access. They don't want the old school, let me run and go print docs and go download and find this and have to come meet you and sit in the office. They don't want to do that. They want quick, fast access and availability. Through this portal, they are also able to track the status of their loan in real time. So there's no need to sit on the phone waiting on me to send them response back. They're able to see their loan in process the whole time. Again, so loan tracking, like I say, you're able to track the status of the buyers, and then actually there's access in there for the realtors as well. So you're able to disclose and provide that information as well. And again, key thing, and I'm very big on transparency. I'm a straightforward person, so anybody that works with me will actually tell you. I'm all about educating my buyers, my clients, my customers. You come in with me, you are actually family after that point. If you're really doing business and you really want to work with me, because I'm not going to steer you wrong, I will give you options, I will educate. If it's something you don't know or don't understand, call, ask me, talk me through it. I am all about, but don't get me wrong, I'm in this to make money, but at the same time, it's something that I learned, I know, and I know I'm good at. And I've never been that person who want to, hide information. I'd rather share it because I'm getting a little older. I'm forgetting. Somebody needs to know. We got to get it somewhere. So again, adding on to that, we have a customized experience. So again, I'm able to offer this different and custom rates for your loan borrowers. Like I say, I have really, really good pricing and on amounts of locks because I'm able to, with the lender that I'm working with specifically for these, they're doing flex terms on there. So you can do a 29-year rate, 29-year loan, able to lock in 22 days, you know what I mean? But then there's no additional hits to them, if their lock expires, if there's anything within there. So like I say, they are really good pricing on those. And again, we can customize it to whatever is going to fit their needs. Again, they have hundreds of product options. We are able to shop for the best programs that is going to fit their needs. Like I say, a lot of times, and I know this is probably a lot of people may frown on that. Everybody talks about first-time home buyer. And this is probably the hardest thing for me to kind of explain. And when I have people call me, that everybody is, hey, I'm a first-time home buyer. What's there for me? What am I getting free? Big misconception. There's a difference between grants, somebody gifting you something, and actual down payment assistance programs. Because at the end of the day, the way the mortgage industry got turned on its head in 2008, you have to document every single dollar that goes into that transaction. Everyone, the realtor fees, everybody got paid, everybody got something off of it. It has to be documented. And a lot of these programs, and I'd even spoke with Lisa maybe a week or so ago, where a lot of people locally are asking me about, I ain't gonna call no names, but it's a loan program where they give you 5% or 3% or something like that. And everybody's like, hey, it's free money. Yes, once upon a time, it was free money and there's two programs in particular in the Houston area. They used to be being funded under a federal grant. Grant money, forgivable, is free money. And that's what that you just always listen to the terminology. So when somebody's telling you and going on about, hey, I got down payment assistance, catch about that is, one, COVID came along. Two, we are in one of the biggest deficits we've ever had. Ain't no free money out there. I'm like, it is, but it isn't. And the ones who are getting it, it is very scarce. That's, for what is actually available. So a lot of the people and what's going on out there, and there's multiple lenders out there offering it. It's actually a second lien. It's a second loan. It's a second loan. And what they're doing on their loan is to say they call it a second forgivable. But again, you have to be depending on which lender and what program it is. There's time limits on how long you have to be in the house. Can't resell, can't maybe prepayment penalties. But again, that's where it is very good. I'm good. Like I said, I have access to I know about 7 different ones right now that are offering something similar, but all of them have different terms on there. Some have 3 years, some 5, some 10 years. So it's all about, be knowledgeable and ask questions, or be sure to ask whoever you're working with to be, let you know what exactly you're getting into. But again, that's where it goes. So Kristen likes to be real transparent about what's going on. Closing disclosures, again, when we're talking about speed and service, closing disclosure is sent before final approval and CTC. So again, you will always hit your contract dates. I had one buyer and one realtor, and I love her to death, but she was like, hey, I want to put it for 30 days. I said, I can get it in 12. No, just for some cushion, I'm going to put it for 30 days. Okay, well, no big deal. I'm like, hey, we got to clear the close. And she's kind of like, well, what are we going to do now? I was like, no, it's up to you. So again, and the biggest part about that is really, because right now just with the industry, the biggest parts of biggest issues that people are running to is timing on appraisals. Appraisals are third parties. Most of them are contracted out by a national, AMC, and like I said, they own schedules. If they don't want to go in nobody's house, they ain't got to go. And a lot of them have jacked up their prices. Unfortunately, I've actually seen appraisal go up as much as $2,500. And that's really, I hate to say it, the industry isn't regulated as hard as ours is, so they can charge what they want to. Again, it's about being knowledgeable and pay attention to who you're working with so that you don't put your clients in a situation where it's something they can't afford. I'm always going to work with, hey, let's find out who's going to give us the best price, best option. And this particular lender here that I'm like I said, it focuses on their 12 to 15 day close. They actually have a 10-day appraisal promise that if that appraisal is not back within 10 days, they will actually give half of the price of that appraisal back. So that is, and they are working with a select group of AMCs to make sure that they're able to fulfill that specifically with this lender. Closing, again, I have complete control over the closing process. Again, that's being able to utilize a closing tracker and ability to collaborate directly with the settlement agent. So again, when you're writing contracts, kind of be mindful. It'll be good and, kind of good. So for working with me, like I say, most time I don't have an issue with whatever settlement agent is, but again, it'll depend on the lender that we're going through. And if there's any way on there, before you start writing contracts, if you're working with me, let me know. Let's kind of discuss where they're going. So that, like I say, if we want to be on that road track to meet that 12 to 15 day, that we work directly, along their lines to kind of, make sure we got one of the title agents that'll be able to take it. Again, one-stop shop. That is for conventional and government loans. Again, this lender in particular, they specialize and focus on conventionals at 700 scores or better. What I will say, a lot of, and that's biggest misconception, like I say, I post this and say it quite often, that everybody is so stuck on, hey, I have to have 20% down to get a conventional loan. That is not true. That's not the case. There are so many products and programs out there. Again, as a first-time home buyer incentive, that's where they offer the conventional at 3% down. The only downfall to that one is, again, it is really keen for people who don't have a whole lot of debt, because the qualifying DTIs that can exceed, for the most part, most of them where I've seen it where they don't have to come with any additional reserves, they need to stay within a DTI of about 43%. Most times I can get it about 50, but again, it'll depend on what the compensating factors are. When we say compensating factors, is if they have a lot of money in reserves, if they have high dollar in 401k or actual money in savings, or, an annuity or anything like that, job history, credit scores. If it's greater than 700, they're always going to get better options there. For government, FHA, VA, USDA, again, I work with 18 different lenders for the most part. I can go down for VA and FHA down to 580. on programs. My only thing to that is, hey, again, it's going to be about how dedicated they are into getting into the process. I typically try my best because I am a financial planner at heart. I want you to make better decisions and don't get caught up in that rat race of being in debt forever. So I kind of help to encourage my buyers, to help or give them tips and techniques to get their scores up to at least a 600, 620. Just again, because it'll save them money in the long run. That's just kind of how I work. Hey, I'm always looking out for what's going to be in your best interest. Like, hey, yes, you can get a house, but what's going to be the cost associated with it. Again, work with a lot of specialty products. So this one in particular, we have pricing through Conquest, and it's for key things on that one is conventional purchase for rate and term refinances, good for VAs and FHAs, and it really offers significantly lower rates to the borrowers. So it is really, really good pricing on those. And when I say pricing, I'm seeing them in the low twos. Refis, 15 years, I've seen them down to about a 1.5 in just the last 2 months. Again, we got 3% down payment for first-time home buyers, and it is going through Freddie Mac's Home Possible, Fannie Mae's Home Ready, and then Freddie Mac Home Possible Advantage. Again, the key things on there is going to be income limits per the county and zip code for those houses. Kind of similar to what goes along when you're going with pricing for USDA homes as well. Mortgage insurance. Not all mortgage insurance is created equal. This particular lender, they have the best pricing throughout the entire country. You actually is able to eliminate the second underwrite by getting mortgage insurance with no overlays. They offer the most competitive premium. So again, very, very, very helpful with the process of the buyer. Any of them who do decide not to don't put that 20% down, that they're at an 80% LTV or less.
Yes. What are overlays?
Overlays. So every lender has what you call overlays. An overlay is going to be their specific requirements for them to be able to fund the loan. So a lot of times you hear people speak or talk about getting their ASU findings. So those are automated underwriting system. Those are coming, the basic guidelines to be able to get that loan to go processed directly through Fannie Mae or Freddie Mac. But each one of those, some lenders will have more. A lot of them, because they are typically, some of them, especially when they're servicers themselves, they have minimum requirements for loans that they'll possibly keep on their books, and those ones that they have to sell on the second market, they'll put those overlays, especially ones who servicing themselves, because they don't want to get stuck with a loan that, hey, if it does default, they'll never be able to be able to sell it. Most of the covert overlays that we've seen with COVID have been ones where people have not been able to, oh my goodness. Trying to think of what's the most common one, goodness. Appraisal waivers.
Because I asked because it wasn't, overlays was not a common term until like last 2 years ago.
Mm-hmm.
Like now you hear people use that as often now. They just bypassed it in the past. Like if they did it, it just didn't have a term. It was just like, this is what they're requesting. This is what our lender is saying that we need it. But now you hear people in the mortgage industry using the term overlay more often. So for people that just didn't know what it was, I wanted to bring it up.
It's just a requirement from that specific lender. Because like I say, I actually had lenders that were going down to 600 credit scores, but as an overlay for more safety for them, they bumped it up. Hey, we won't do a FHA less than a 640. So that's kind of what they call it, overlays. I actually had another where I've seen some where typically self-employed borrowers that I've had some where they had findings as long as ASU came back with an requirement for only 1 year tax return or 12 months of bank statements. They coming back and they're asking for a personal and a business tax return and business and personal bank accounts. So those are overlays with them. Mm-hmm. And the key part about that with COVID, because there were so many people losing their jobs at a rapid rate, that hey, they had a job today, they get to the closing table doing the verbal verification, deal gone, you know, and they can't do anything from there. So that is an overlay that's gotten added on quite a few number of loans. At one point, it's like, hey, you just do a verbal, you know, do a written and a verbal early on in the process, but they getting down to, hey, I had one of them that requires same day verbal, that they'll call them verbal, you know, do an employment verification on the day of funding. Yeah, so that will be a common overlay that I've been seeing here lately. Again, so you know, number 4 reason for working with an independent mortgage broker is digital mortgages. Again, it's all an online application. It's a secure and hassle-free way for your buyers to apply. This actually eliminates the process or having to go and do multiple loan applications and have the credit reports run multiple times. Once they submit with me, I'm able to run credit one time, so they'll have only that one inquiry. And again, that same loan application, I'm able to export it and take it to multiple lenders as needed, you know, if one of them does have an overlay or something that comes up that we aren't able to process with them. And again, going dockless, the system actually is able to eliminate people having to go print documents, scan, file them, send them to me. They actually have a way to input their income and automatically verify it. So again, takes the hassle out of trying to find a piece of paper that, hey, did you send this? Hey, did I send this to you? I forgot it, I lost it. Hey, look, this right here automatically verified. And most of the time that's for assets and employment. Again, so number 5 becomes a partner where partnership makes a difference. So renting versus buying, attending open houses to be able to instantly approve buyers and taking markets out, most purchases off the market within 2 days or less. So again, if you have an open house and I'm able to have a tablet or something there, you have the buyers go ahead and sit and put that approval in, put that application in there. In most cases, I'm serious when I say I'm getting same day approval. So they put them in there, they got conditions and everything lined out before they walk out your door. So it's just a matter then of, hey, moving money. Again, you pull the contract out, you're able to take it off the market within 2 days or less. Again, home buyer mortgage 101 is available by request. Like I say, I'm able to walk through people on that. I'm 100% and definitely able to co-market with you. So I do a lot of flyers, co-branding, not necessarily steering, but co-branding. So just keep that in mind. So I leave it with there, just kind of questions that you may have for me. And again, that's anything related to the mortgage side, any loan programs that may be out there and available, or things that just don't make sense or you're not aware of. I know Lisa and I talked about FICO scores, but again, any questions you have, just common stuff that comes up quite often. Yes, but again, that one, a little bit changes on that one, so I'll send out an update to everybody too on that one. But I do have a lender. Part about that, and when I tell people, hey, there's a cost for everything. If you out here and you just ran wild and did what you wanted to do in that credit score, a little on the low side, yes, you can get a house. It's gonna cost you though. There's definitely a way, but this one I have about 10% down. Better in your favor if you're able to do more. So yes, minimum 5, yeah. And like I say, I'm able to go with, I offer programs for non-qualified mortgages. So those ones are gonna be jumbo loans. Somebody who does need 100% bank statement program or just financial statements. I have lenders that are actually able to do financing for commercial properties as well. So like I say, just a lot going on within there. If you got a scenario, I probably got an option for it.
All of your options are available on your website to check.
Yes.
And are there explanations, like if someone wants to know what a jumbo loan was?
I have not put a lot of it out there, but I typically online on my Facebook page and my Instagram. I normally try and post information or at least record videos. I'm real good about. I hate to sit there and just type a bunch of stuff. I try and do quick videos here and there, and I do a lot of live sessions where people ask questions, but it's actually available out there to be reposted. But jumbo loans or anything, just on that one. But I can kind of go over some of most common or most regular mortgage types or whatever. But jumbo loans are going to be loans that are outside of the of sale price of the value for homes outside of Fannie Mae and Freddie Mac conventional. Loan limits actually went up for 2021. I'm not gonna quote any of them off right this moment because I am doing taxes, PPP loans, and doing a whole bunch of other stuff, so I ain't gonna tell nobody a number right this second, okay? But those are jumbo loans, and again, the income limit, the limits have gone up. But FHA is going to be a loan that's backed by the Federal Housing Authority. They require a minimum of 3.5% down in the investment, and that is with just on the investment piece of there. And what I run into is a lot of people, because I've had a lot of buyers here just recently, they get real nervous about that 3.5%. And again, that is on the sale price of the home. So when you get down, because FHA requires a LTV on that loan to be 96.5. So that 96.5 is 100 minus the 3.5. So FHA, that's at a minimum of how much you're able to have to do. And what that means when I'm underwriting or writing a loan in the bank as assets available, they want to see that, hey, you have at least that money, that amount of that loan in savings or put up as money available. It does not mean that they always have to spend it. The key part about that is and where it makes a difference. And I guess, and it's hard because people just get, oh, it's 3.5. I got to come up with all this money. It's a matter when we're underwriting, I need to make sure that you have a strong enough file to go in. And when I say strong enough, that, hey, if you go in here and you have a change in your job or a change in your income, or you get injured at work or something like that within the first 30 days of you closing on this home, I need to see that, hey, you either have some money available, that if you pay this 3.5%, it's not going to completely wipe you out. That's what we're looking for. It's not even a matter of, hey, I want you to give me 3.5. That's not the case, because any of y'all who have closed loans, you know that your buyers typically a lot of times come with less to the table than that 3.5. And again, that comes with lender credits. My lenders actually give a lot of credits because, again, I'm on the wholesale side. They give me better pricing because they want me to bring their loans to them. It's really because if I do certain volumes with them, they'll give me extra incentives on there. So right now, I think I'm at 100 basis points. Loans last month that I was actually getting credits of $2,500. Yesterday, I got a letter with a credit of $6,498 on a FHA loan just yesterday. So it's typical closing costs, and we always kind of throw it off. And so if you're gonna do an FHA loan and you're looking for an estimate on how to gauge what the closing costs and the price of everything gonna be, you do 3.5%. And also we kind of do it just on a wide spectrum. You say 5% towards closing costs. That is a very elevated number. It's normally not that much depending on the value of the home. Most cases, and I'll say maybe 250 up to 300,000 closing costs. I'm seeing about no more than about $5,600. So if you have a contract and then the seller's paying par closing costs on there, what they leave you? You had $5,600, they paid $5,000 towards closing. That's only $600 difference. You got a lender credit in there for another $1,500. That wipes that piece of it off. Anything extra that's left over between lender credits, seller credits, that can actually go towards, that's where it goes and reduces their down payment. And then in certain situations, because lender credits, most of the time, we can't apply it to, it can't go towards their down payment because, again, they want to make sure, hey, they have this investment. Yes. So when you have more available, you don't refund it to them. You take it as a principal reduction. So in total, it ends up reducing the payment amount, interest on the loan, and possibly some scenarios where maybe, like I say, it's definitely going to save the borrower more money over the period. So again, I am an advocate for realtors, love realtors. I've had so many people who call me and they go into these sales offices with these builders. And when I tell y'all I got nightmares, absolute nightmares, because they went in there not represented. I have, and some people, it's just all I'm saying. I'm gonna keep going. Okay, VA. So VA loans I think are absolutely amazing. If you have a borrower who actually has some kind of, who's maybe able or eligible to go VA, if they have full entitlement, it is a great option. It is for the most part, especially if they have been, if they get that 100% entitlement, VA will pay 25% or cover to guarantee 25% of that loan. Personally, well, not necessarily person, but they'll guarantee 25% of their loan. So with that means they don't have mortgage insurance. And so end result, and they don't require them to pay an extra down payment. That in yes, ma'am. Okay, yeah. Only thing that they typically have is a funding fee. Some of them are exempt from a funding fee depending on their status, because I think it's any of them with service-based injuries or disabilities, or any that are getting disability at a certain point in time. They don't have to pay that funding fee. So at the end, they're pretty much left paying closing costs. Had a borrower, he ended up having $500,000 home. They brought less than $3,000 to the table to close. Again, they were just paying their insurance, their regular prepayments. VA is, like I say, I love VA. Only thing about that I actually kind of caution people on is if you are buying where it's a joint purchase, that there's only one borrower is VA eligible, the other one isn't. You have to be careful about that. A lot of times, in most situations I've seen it, if they don't have a lot of funds available, it's actually better if you can qualify on that VA, on the VA person, on a loan on that loan. You have a better chance of getting qualified, because if you don't have that money available and you're trying to go in with no money out of pocket down payment wise, that 25% of the VA guarantees, they will only cover the VA entitled person half of it. So ultimately, for them to be able to get that VA loan on there as a joint borrower, they got to have 12.5% down. Somebody has to cover that other half of that 25%. So that's why I run into a lot of people like, hey, I want to go on the loan. Community property states, fortunately, I work in too. That I've actually had like, hey, it's not in your best interest to go that route, especially if you just don't have the money. Trying to think other pieces on there for VA. VA is like, again, you can have multiple VA recipients on there, which is absolutely great on there, because again, you're able to use income from both, where you are able to, like I said, afford a whole lot more house. Yes, ma'am. What you got? Yes.
Yeah, you got
That's
the
the first
lead,
one.
No, not right this second.
You gonna join us for lunch?
Yeah.
Yes, I will. Yes, I will.
Here's what I would love for us to do, man. I want us to take a slight break. Everybody get us some food. Then we're gonna come back and we're gonna eat and talk and just kind of break bread together.
I'm sorry. Y'all go do your thing, because I typically don't be hungry. That's the problem.
Those of you that are online, if y'all got a snack in the refrigerator, grab your snack, because we're not ending the live right now. We're about to get ready to grab us some food. And then continue the conversation. So grab you something to eat, something to drink, and we're gonna continue the conversation.
You know, I'll be able to like, oh my goodness. Okay.
You eating too, right?
No, I'm good.
You good?
Yeah, I'm good.
All right.
Okay.
Don't worry. Let's go ahead and figure it out.
Okay. It should be, I'm pretty sure it's supposed to be chicken, sausage, and ribs, I think. And dirty rice and ribs.
Is that okay?
Yes.
Okay, so we still on top of the microwave? This is awesome. Okay, so we'll switching. Okay, so this is to the side there.
We'll be right back.
I mean, yeah, we can do that. And what's the
See, these are do some good eating right. That's when you put the meals together, like, whoa. Scoops up?
Yeah, I forgot about that stuff.
Yeah, she's cleaning out some of these scoops and stuff like that.
Meditation and all that.
You did your bread right there?
Yeah, it was like it ain't hard to film you.
Yeah.
Exactly.
So how many people we
you, I was like, at the first, like, oh, about 10 people. I was like, okay, cool.
Exactly. Just so you can eat today. Come on now. Yeah.
So those are just extra
Yeah, extra, yeah. Okay, and what's this one? Okay, so that was. Okay, we get it. That's one, that's an extra bridge.
Oh, that's extra.
Okay.
Y'all supposed to be cut out. We was like, get your first. Yeah, she said, right in the way. We only had one person we had to try to beat out. That was the road just gonna get to the plate. No, that was the rules in my grandma's house. I mean, get there.
Double check it real
Went to go get silverware. Go get the scoops.
No, we did.
Three younger sisters. I'm the oldest though. So I was always bossing. Yeah. I got all the details on it. I studied every day.
The real ice cubes right now. The real ice cubes right now.
Oh.
Just smoke going quickly and everything.
No, I was thinking I need to, what you got record. Don't do nothing yet. Hold on.
Yeah, we need to put it on Facebook Live.
No, they ain't gonna get my Facebook Live, but I do need to do like a, I got it.
I walk in there with y'all plates.
Make sure you post that.
I gotta hold it down for just
Yeah.
not
You
yet,
gotta
so I
get out the house, right? Sleep
quick. That's off the bone.
Okay, ladies, you can grab a plates and get that, and y'all take, and y'all not going. Y'all move a little slow. Y'all move a little slow. No, I'll show you how it's supposed to go. Exactly.
You get that, I should have seen no potato salad up in there.
Progressing their rights. He gave me some of this cola.
Don't listen to that. I'm gonna tell you. Okay, y'all, I can't tell you everything. I'm gonna tell you everything about people. See, let me know some of the things that I've experienced. I think there's a way with AK. Don't listen to Lisa. You're gonna learn today.
I like literally forgot what you talking. Because I was like,
It's male delicious and look good. Don't think I'm anti. I work right with that.
you gotta get to them.
Fresh out. Hey, soon as I
idea of what the purchase order is going to be and everything, and be able to fund, close their loan and their mortgage is in place before they even break ground.
Okay.
So that's
that's even smoother process. No doubt about it. Okay.
Like I said, we ain't got to wait 90 days for nobody to finish the bill.
Yeah.
Christian, I got a question about a VA loan.
Yes, ma'am. I'm gonna try my
Good
best.
house, because the agent felt like the VA loan wasn't the way she should advise her client to take it, because the house was, and I'm talking about the house we went to. No, we did not get it. We're not even the backup. All because she had a VA, we had a VA loan, but we could have got a conventional had she came back and asked us. But she didn't want, so it's a house out in Angleton on the water. And so she mentioned something about she didn't want them to do VA based on the house having wood. I don't know what part of the VA loan process would have. I'm pretty convinced she don't know what she's talking about, but you please tell me, okay?
No, I haven't seen that. The house
It made no
was
sense, even so they had an elevator that, the house is raised up on the beams, but they had an elevator
that was something
that goes up.
and
So
there was
they
more
were
wood on
saying,
there.
exactly, that part was it, they were saying something about the wood on the elevator.
And this was them just talking that they had an inspection on
We
appraisal.
didn't get nothing, that's what I told her, I said, I said, that sounded like a lame excuse why you didn't give us my clients.
Yeah,
That sounded like a lame excuse.
seeing that happen quite often. I got one had a manufactured home, but it was sitting on 20 acres. And gave them every single run around in the world about it. Our first time I've ever experienced an appraiser and an agent getting in the middle of a deal.
Wow.
Agent knew the appraiser when he got out there. She went out there, somebody she known 20 years. So, and you shared that information in
See, that's
every
what happened in
single
the
deal.
country town, and that's the problem I have, so when I try to go break through Galveston County, I had that problem all the time. They won't show you houses, they won't give you the offers, they won't let you get awarded contracts, all kind of stuff.
Yep, and I had, and my breaking in Mississippi, that's what I ran into a lot of. But yeah, they're pretty resourceful. I just ain't lived there in 20 years, but I know people. So it got real interesting around there for a little bit. But yeah,
Okay, I was puzzled by that.
that was backwards. That was the only way they could have told no is because the VA appraisal would have came out there and said I told them that. And that would have been done as soon as they got
Do VA appraise any harder than regular appraisals? Like anything different? I'm not, I was trying to tell my client that.
No, it's just, it has to be a limit. Because the VA is guaranteed, they pick their appraisal. It has to be one to two by them.
It was something with the appraiser they were scared of, and she kept asking me, you think your client will wanna still want the house still if it doesn't appraise? I mean, not for that matter, but not for that amount.
Because you know the house not worth it.
So that was her problem, yeah.
You know it wasn't worth it.
But yeah, you're right.
That's all it was. Trying to
So yeah, they
backtrack.
didn't get it, they heartbroken.
Oh, that's a mess. That's what it's all about the agent. So any of y'all new ones makes a real big difference. That's what y'all into. Yes.
And make nice at first. So when you put that offer in, they can kind of remember who you are.
Yeah.
'Cause,
I've had a couple deals fall apart and it had nothing to do with me. And I'm like, I try my best, but the man got literally clear to close overlay. They called the day before they were supposed to close. Called and man had got fired early in the week. Didn't tell nobody. And the agent is mad, well, they were supposed to close and this and this, why are we not finding out? And she calling and tagging me like, ma'am, I'm just as stumped as you are. She was like, he knew he didn't have a job when he got the contract. Yeah, he had a job, ma'am.
Are you good with agents asking you to call an agent? Just, So
yeah, when I run into
I
that.
ended up having my loan officer call and let them know, hey, my client is A1, good credit.
Yeah.
No problem here.
I don't have a problem doing that, but then sometimes it's because I don't have a problem doing it because I've had to do it, several times.
In reality, that realtor should have called
exactly
the loan officer to verify what she needs to verify.
Yeah, I probably most of the cases I normally have. I probably had a listing that their agent normally call me. I don't know. I've had only one or two call me.
You did that. I ain't do it.
Barely.
No, I don't mind calling because I have to a lot of times. Yeah,
Yeah,
because
all my years, I've only had them do that maybe 2 or 3 times.
Yeah, and then I say because what happened was initially they were having, I forgot what was going on because I think hers was contingent on something.
Yeah.
And everything on the file was fine. I think it was just, for some reason, somebody in underwriting dropped the ball and it was taking longer than it should have. And when I say when they got to the end, I'm like, that head was out of everybody's control.
What's the process with VA loans? Do they have to go get the paper or you can get all you need?
Most of the time I can
You
get
can
it.
get everything? Okay, I love that. So,
Yeah, most of the time I can order it. Yeah, I have
that's my girl. That's the only reason I'm still with the one that I use now.
Really?
Is because she's just a one-stop shop. I don't have to do much.
Mm-hmm. And I'm pretty much there.
Yeah, with the VA and the down payment assistance and all that, just give them whatever options they have.
Like I say, I kind of
educated on what they need.
Oh yeah, I try my best to, because like I say, I have a lot of people who come in all the time and like, hey, I want down payment assistance, I want down payment assistance, but that's why I say I'm a fan of it too, so depending on your situation. If it's somebody, like I say, I know they say, okay, it's a means to help people, but at the end of the day, they end up paying more in the long run. Because they either gonna give you a high price, and the bad part is that who's ever doing it, they dictate the interest rate. You got interest rates down here at 2.25. I just locked one yesterday for 2.5. But the first time home buyer brokers and ones with those that assistance, some of them, the first lien on the house, they'll do it at 3.75. But then on their second lien, it's normally 2 points higher.
So down payment assistance have double lien?
Mm-hmm.
See, that's what I'm talking about.
Mm-hmm.
Yeah.
So that's why they tell you, and one, I know they market that, hey, you can put more money down because you get put there, you have your 3.5 and you get the 3.5 I gave you, and you can buy, it'll help with help with the amount because you can probably, bring more down or whatever and reduce the LTV. That helps in some situations, but not all.
My head hurt. I know.
I'm sorry.
She said, you just call Christian because I don't know.
Honestly, that's what I tell you. Just call me.
I want to know enough to get them.
Yeah.
You still gotta tell them the knowledge you have a little bit.
A little bit of it, yeah.
I can say, well, she an extension of me, so now you go.
Yeah, I love that because like I say, I have people call me all the time, and I don't have. That's what I was telling them about. I'm like, hey, I got plenty of realtors in Mississippi. I just don't know none in Houston, in Texas, and the few that I do know, they North Texas or whatever. And I'm like, yeah, they ain't really helping me or whatever. So I'm like, yeah.
So what other questions I have? If we have a seasoned mortgage person, she knows everything about the mortgage.
So what I'm telling her about is that
she a nerd. She just like to know.
Mortgage 101, because that'll be more like educational and going in depth in what a CDA is and all those things, so we can go into that.
Yes, in my bad.
Yeah, I like that she has mortgage 101.
Yes, and be out and I have to tell people all the time, I talk fast. It's really because, especially when it's stuff I know and I'm excited about, I talk fast, but I'm not a fast talker. I'm like, hey, I'm not trying to show. I'm like, do this over here and doing all this over here. I don't do all that. One, too tight.
So the mortgage 101 is a class?
Well, they have resources to go through, but a lot of stuff I have able to send them through kind of a system that's hosted through their company or whatever. But I typically, for the most part, like, hey, we can do straight Q&A. I can give you documentation or whatever, just kind of resources.
I need to
kind of depends on what I'm feeling. I'll do virtual here and there, but like I say, because I got the mortgage and the tax company. Like, I'm glad she reached out to me early because, like, yeah, we got tax start on Friday, so I'm like, I'm normally always on go. So, that's where my assistants come in. They're absolutely great. Best way, email me. I promise you, I'm sitting in front of the computer, so I'm typically, if it's something directly that you want to know, or send it to me by email. I typically respond.
You know what I would tell my assistants?
What was that?
This is you should tell your assistants as well. If you get a call or email from Larry W. it becomes priority.
Hey, I'm out here. Okay, only a select few get my real personal cell number. Now, if Larry called, Larry will probably get priority on that. I just got to make sure Larry good enough for me to give him a number. Because if you go to call me in the middle of the night, Larry, we ain't going to have no good relationship.
I can answer the immediate question.
Okay.
I give them all the yeses they needed to them.
I tell you, hey, look, she's cranky. She don't like to be woke up out of sleep. Don't call at 9 o'clock.
Them boys and had all over the place. They showed up and want to talk to you.
Nobody. Somebody had that little meme online talking about anybody who sleep with their phone on do not disturb or just don't give a F about nothing. Sure don't. Not at all. Not no business after that house. Because one, I can't do nothing. If you out there getting shot, I ain't gonna make it on time. If you dead, you gonna still be dead when I wake up. Don't wake me up out my sleep. Right. I mean, don't ruin my sleep. I'm gonna pray if it's somebody I really cared about. When I wake up, I'm gonna probably be distraught, but I don't want to be doing it. Don't wake me up out my sleep. Very, and I can tell you, I can tell you when I'm tired. Like, don't call me out my sleep. We can start early in the morning.
All right. Anything else that you think we need to know? Or that you wish more realtors knew?
More realtors.
Do this with your client first.
Yeah, exactly.
Yeah, so I got the agency group I work with out in Mississippi. What they do is kind of tell their they have their, I forget what site or whatever it is, they tell their buyer to go pay $1 for it online to get their credit scores. But what they're doing is, and that's what we had talked about, I couldn't remember what it was, but FICO scores. When they're going on those free sites, they're out there looking and you tell them, hey, they got a 650, they got a 700 score. But you're looking at most of the free sites, those are scores for auto loans and credit cards. Okay. Mortgage industry scores are based on, because you got to remember, you got a property that's been on the market, got sold, got sold back in the 40s and 50s. You can't go and update the scoring model because the amounts in their portfolio will change, and it'll undervalue or devalue those ones that are already in there. So to be consistent, the mortgage industry uses the same scoring models. So it's a 5, 4, and a 2. Because 5 is FICO 5 is Experian, 4 is TransUnion, 2 is Equifax. It's one or I have the 2 E's backwards, but just know it's a 5, 4, and a 2. Tell them to stop gauging off of that because normally their scores are anywhere from 20 to 30 points less. Oh, wow. Okay. So you have somebody out there going and they just know that they're ready to get to be so go ahead. Yeah. Like
what about the scores at the bank's office?
Same thing. Because if you look at it, the key thing to look at is when in the disclosure piece on in there, when they tell you what score it is, it'll either say Advantage or FICO 8 or FICO 9 or Advantage 3 or something. Those are not FICO scores. Those are not the mortgage scores that the industry uses.
5, 4, 2.
And they need to be in the best way that I know to get them. Again, if they want to pay for it, because I have a lot of people who trying to gauge their credit and everything before they go apply, whatever. MyFICO.com is a real good resource. It's $30-something a month, but depending on if they're working on their credit or whatever. And I know a lot of people who do credit repair. I know a lot about it. Used to do it, stopped doing it. People make me tired. So I stopped doing that. A lot of them use Identity IQ. Same thing. They're not getting the right scores.
So my FICO would be the option.
Yeah, that one or
My FICO.
Your mortgage broker, and I can give you a score.
You can give them a score without running it?
So, I forgot about that. Yes, so for all of them, anybody who does call me, any borrowers, for the most part, especially if they don't know what their scores are, I do a financial planning consultation where I do a soft pull on their score, get their mortgage scores. I'll review their income, everything, all kind of income, debt, give them recommendations on stuff that I see to help improve their scores. I've seen most people, they find it really, really useful because there's so many people out there, they trying to Google online and figuring out how to, how they can fix their credit and do stuff on their own, but they out there paying off collections. You paying without charge-offs. That makes no sense to do because any charge-offs means absolutely nothing. There's nothing, means it does not impact your score. It's not included in the DTI. So that would be something.
So I hear soft pull, hard pull. Right? Those are terms we hear a lot. What's the difference?
Soft pull does not impact your credit score. It won't drop your score. Hard pull, hard inquiry, where it's going to drop and pull their score, drop your score or whatever.
But what makes it soft? Like, are they not using
soft? They just say,
Social Security?
Oh yeah, they use all of it. But think about that is soft pull. I cannot provide it to the borrower. We can't provide it to the borrower. We can tell them the score. We can't give them the report. Okay. But hard pulls, I have to give by law. I have to give them a copy of their credit report. Okay. So that's when they tell like when you go and apply for something in the store, a charge card or something, and they have to give you your score, give you that letter saying you can request a copy of your score. But the soft pull, nobody ever knows to do it.
People that can do soft pulls?
Anybody who's set up and authorized through the reporting agencies. So what it is so you got the major players, so you got Equifax, TransUnion, but there are multiple credit reporting agencies that you have to get signed up with to be able to pull from them. So yeah, you have to have, and it has to be a valid legal reason to be able to have access. So as a mortgage broker offering credit, yeah, I can see it.
But it doesn't impact the score.
No, it does not bother their score. I can see exactly what they true mortgage scores are, actual debt. I'm also, like I say, able to rapid rescore when we got situations like that.
So it's no different from a hard pull other than the fact that you can't give it to the client and that it don't affect your credit score.
Correct.
Or you able to see something, or you can see.
I can see everything.
So the information is all the same.
All the information is the same, yeah.
So
maybe it's the entity. Is it the entity that pulls it? So if a credit card pull it, that means it's automatically going to be hard?
Most of them they do. Most of them they do. Some of and it's up to them on how they choose to do it. Some companies automatically charge you. Some of them, depending on the type of lending that they do, they have to do a hard pull. But yeah, from on our side, we're able to do it. That hey, if they're just kind of curious as to what they qualify and what their scores are on the mortgages, to be able to do it that way. But yeah, for most credit cards and car dealerships, yeah, most of them have an option to do it, but they're not gonna do it. Yeah, most of them don't do it that way. Okay. It's just a matter of their business model. Yeah. Okay. Cause I guess some of those companies where you shopping online and they say, hey, we'll do some of them will say, hey, get qualified with us before, without doing a hard inquiry. That's what they're doing. They take the option to do that.
With refinances, would you prefer people go through their service?
Not necessarily. It depends. A lot of times we're actually able to get them better scores on there. I would say for anybody because I've seen a lot of them ones who trying to refi, doing it with COVID or whatever, and they may have been behind and needed a modification. I've seen it that, hey, you may need to go through them, but a lot of times, depending on who it is, because the larger banks, they probably not, most of the time, not going to be the best one to go through, because they'll still have those overlays a lot of the times. Because some of them, they'll try and hold it on their portfolio, but honestly, it just depends on the situation. Because like I say, in some situations, I actually have better pricing because they'll say, hey, it's a no cost to you or whatever, where they'll pay the closing costs on there because they're doing everything in-house. But then some situations that, even with that, they still aren't, I may be able to still give a bigger credit, towards it or whatever, and lower interest rate. Because some of those, they get capped at how much they can give, how much of an interest rate they can give. Mm-hmm. So it kind of just depends. That's why I'm like, that's the good part about dealing with a broker instead of just going to one lender. Because like I say, one that tell you no, I probably got about 4 more other ones that'll tell you yes, you know, because of those overlays. Because the bigger players, they service their loans, they're not budging on them, you know. So like if you for builders, DR Horton, I pay picking on them because that's who my builder was, but they had their own mortgage company. They want prime. Hey, look, we can get them in there. It's not gonna be no difficulty in there. Straight W-2, you know, conventional great reserves. They don't want no blemishes on no collections. You know, those they're willing to take those types of files. But like I say, I have some people. It's not a lot that needs to be done on there. It's just putting the work into doing it. You know, so like I say, I'm all about making sure that. Because if it's an option out there, we're gonna exercise that option, whatever option it may be. That's just what my approach is.
All right. Good stuff. Anything you want to know from us?
Yeah.
You want to know from us?
Okay. How long you been in business, and how many agents you got working under you, and what do you specialize in?
Well, since I'm eating, I'm gonna let my co-founder.
Gotcha.
What?
I'm gonna let him answer all them questions.
So we've been together 13 years. January 2nd, I believe, made 13 years.
Okay.
We have about 55 agents and 20 affiliates.
So 28 affiliates.
About 28 affiliates.
Okay. So is that including lenders and mortgage and title?
So the affiliates are the 55 agents are licensed realtors.
Okay.
The 28 affiliates are people that are now going through their coursework. They're either in class to get their license or they're studying to actually take the exam.
Okay.
So they're kind of like
And
they
kind of
almost in
private
there.
tutoring.
Yeah, they made a commitment to join us once they get licensed.
Oh, well, that's really good.
And what was the other question? Is he any good?
Here.
Depends on what day he asks. And if I already fed him or something, I don't know. If I done fed him, he batting 100. And if he got this low blood sugar because he ain't ate now, I'm just saying. I don't know.
Shut up, Randy. Shut up. Because he over there looking like her.
Like that Snicker commercial, you know that Snicker commercial when people need
Don't do it, Randy. Don't do it. You gotta go home with it.
It's funny to me because you use the diabetes joke, but you were explaining what I go through.
Oh yeah. That's why I tell people, look, somehow they like, hey, look, calm down. You can't call me and just say anything out the way. I'm trying to work with you.
Like, can I just talk to Randy?
Hey, look.
You ain't ate. You haven't eaten.
No, yeah. And I'll be over
Randy
there.
on the phone,
Oh,
so I can get this
goodness.
done.
Yeah, I'm like, hey, look, I'm like, wait, because I'm like, somebody, I don't know who it was, somebody was like, well, this, and this, and this. Wait, pause, hold on. You want me to think too much right now? I need to go eat. You don't want no answer from me right now. Just hold on. Let me go regroup, come
It's
back.
gonna be the wrong one.
Right, you ain't gonna like that. And then if you keep pressuring me, it's gonna be even worse. So that's why I'll be like, hey, the receptionist or either Randy answer the phone.
Don't get that.
Yeah, may need
I'm
that.
not good for him right
Nah, it ain't good for nobody. Nah, but I try and be as upfront as I possibly can. So y'all been 13 years at straight Houston market. How far you expanding? Y'all just licensed Texas?
You know, it's funny because people always ask us that, and I'm like, it's Texas. Like we got
Everything,
land, we
yeah.
got prices.
Yeah.
Like it makes it's so difficult to want to go outside. Like even when we do get that random Atlanta deal or New York deal, we'll just partner with another agent and just get a percentage of the deal.
Yeah.
And be okay with that. Because
That's cool.
here in Texas, I mean, even just thinking about going outside of Houston has been a challenge because it's like we can eat well within our city limits.
Right.
The only thing that challenges us to want to go outside of it is we have a lot of realtors that are from outside of Houston that want to be involved with the organization. So that's probably the only real heavy reason why we're leaning towards Dallas right now, because we have a lot of interest that's coming out of Dallas.
Okay, and which is actually, I like that because that's where I'm trying to move back towards, because I was in Dallas 12 years, but he's from there. And eventually once, because he's like my processor, but he's actually working on his LO. So plan is to be able to put an office up there, so that he can actually kind of run there when that, as we get everything set up.
Let me know as you get familiar with it, because a good friend of ours just opened up one of our title company just opened up an office down in Dallas area.
Okay.
So, and I know they always look into, have spaces. They do those. I don't know how to describe it, but it's,
like the shared space kind of thing.
Shared space kind of across country. That's always good to be close to.
What brought you to Houston?
Oh goodness, back when I was in the oil and gas industry, that company relocated me down here. I worked for them 3 weeks. They turned around and laid me off. Get hired on. Who did I go to after that? Shoot on. No, that was FCC. No, scratch that. Other company in Lufkin. That's the first one I got laid off from. Like I know I got laid off twice, but I was ended up down here for a job. Relocated, laid off 3 months, then went to work for HISD. Absolute nightmare. I hate government.
Was this all in accounting?
I was account manager, so I was over all of the fixed assets for HISD.
Oh, no, okay.
Yeah, HISD something else.
Oh yeah, quite interesting. That's all I say. And it was yeah. I march to my own beat. I will be very honest about that. I don't do what everybody else does. So I tell everybody when they start, I ain't your typical nobody. Kristen does what she wants to. Kristen came out of corporate for that reason. Hey, we're gonna do business right. I'm not going to jail for it with you, alongside you. I ain't coming to see you. I don't know you. It's kind of difficult when I say some of them big names in the district. That one most recently, the feds went and raided his out. Yeah, I used to sit across and walk down and talk to him every day. And what I had.
Can I trouble you to take a picture from that angle? So you can get like this entire table. Sure. Y'all might have to scoot in just a little bit, lean forward or something.
Yeah, that was kind of interesting because like all this stuff they were sitting there talking about, I had been saying I was there 5 years and I was like, they stealing. I'm like, they stealing still.
Do that right there. You can do that right there. Get her in there still. What? She can just have her hand across her face like that.
I think I got it.
You did? Raise it up a little higher. There we go.
Everybody look. 1, 2, 3.
Thank you.
It's perfect. It's perfect.
It's all good,
You've been
Ted.
picking on me since I sat next to
Sure
you.
did. Yep. Look, even Val didn't get on line this time. This is the bully side of the table over here.
You've been picking on me since I walked through the door.
Yeah, those type of people.
Look, you can see the conversation. Hey, look, you can see the conversation. Like that was you sliding, and then that's me pointing at you, and then that's you like, no. That's the photo of like, okay, you got it. Yeah, stuff like it. That's perfect. That is perfect.
Wow, that's crazy. So you was talking to them folks that
oh yeah, no. One before he got up in that position, I was like, oh,
so they stealing.
And I kept saying, hey, stuff ain't just supposed to disappear.
I am. I got you. I'm telling you.
We out here in Hurricane Katrina.
Not Katrina.
Harvey.
Blame me. I'm every time. Matter of fact, this your new required seat right here.
About 15 brand new Yukon Denali's, loaded limited editions. Doing Harvey. Why? Wasn't nobody in the office. $79,000 a piece, and wanted me to come in there and give you title work. Ms. Bradley, we need you to sign off on these purchase orders.
My name ain't on there.
Y'all gonna figure that out on your own.
I'm not putting my name
I
on
don't
there.
fool with none of that. I was like, hey, like you said, then it was.
Really?
Yeah, that's my other sale. Yeah, so just text it off of. You can text me, call me on that one.
All right. I need a guest for my podcast on February 25th. You gonna be my guest?
Okay, sure.
All right, I'll text you.
Yeah, you won't have to because I
text you details so you can look at your calendar and let me know for sure.
Oh shoot, sure
it's a Thursday. It's a Thursday though. This is a Thursday during the lunchtime. Okay. 30 minutes of your day.
I love how I hollered that weekend. Hey, look, that is so bad. He just told me that. That's like,
but that's pretty good though.
My only niece's birthday.
Hey, he was like, yeah, that's one thing you need to know. Happy birthday, a gift card, something. He was like,
she'll be good. All I gotta do a cash app. She'll be fine.
That always answers the question. I'll be fine with that one. No doubt about it.
Especially because she wanted me to buy her a car. Like, why you think I got money?
Should that be
passing that car?
I don't even have one of them, so no, I'm good on that. Telling people now, I'm like, man, get my life together. Pay this bank gonna pee him out this house.
I know, man.
I ain't coming like that juice. That juice went fast.
Oh, yeah.
I ain't even need
Everybody
to
else
get
just trying to
them.
play like it wasn't that big a deal. But I'm telling you.
And then Ellen kept offering it. I ain't got none right there.
Like, take the book. All right,
Yeah,
y'all.
midday, yeah, I should be, yeah,
I
midday,
gotta
I
get out
should
of
do.
here. And I'll reach out to you probably later on the day to get
Okay.
the extra. Thank y'all so much
You're
for that.
welcome. Thank you. I appreciate y'all.
And then that's we officially pretty much done.
Thank you.
I was gonna see if we was gonna get some extra tidbits out of you.
Yeah, I'm I ain't know what time we got, cause I need to be ready to, okay, 1:30, okay.
We're pretty much done. I usually block out this slot from 12 to 2 and it just go have a long
Okay,
day.
cool. I like that. Yeah, because I've been, I try my best to get as much information as I can.
You did good.
Hopefully people deal with me. That's what I get all the time. I have more people call me out there, see a video, be like, man, you just so down to earth. I just feel like I know you. I know I probably talk too much till I'm a business, but like, yeah, whatever.
But it works.
Like, hey.
It'll track you.
Yeah, I say my thing is this: you have people who just feel like they just too big for everything. Everybody, I've always been that one. I don't care what your title or your role is, in wherever it says everybody get treated the same. Yes, always been like that. That's what that whole I guess that's what that Mississippi part following.
The SIP.
Yeah, originally born and raised Jackson, Mississippi. I was in Dallas 12 years.
That was with work too.
Oh, I packed up. I was okay. So I was the 6 kids. I'm the rebellious one. I got married with my mama and packed up all my stuff.
I'm still stuck on this 500 minimum.
Hey, but then again, they better come with some money.
Yeah,
I ended up having to change it when I was like, oh shoot, I forgot to put it in there. So the revision it has 500.
3.5% off.
Yeah.
I don't want to. I'll be so scared to tell people that. I'm like, look.
Hey, as long as they don't have no whole bunch of stuff going on or whatever, like I say, I do it. But again, that's where I come. Not necessarily, because like I say, just remember this: interest rate's not high right now nowhere.
I got one chick. She got, but I know for a fact that she probably got a broken lease.
Okay. Depends on if it's on there as a judgment. If it's a judgment, ain't no problem. As long as it's not a judgment, ain't nothing I ain't even worry about.
She just don't. I'm like, you're gonna have to probably pay that.
How long ago was it?
2 years, I think.
Is it more FHA? FHA, more than 20 any delinquencies or collections greater than 24 months? Don't even matter.
You say don't burn.
It don't even matter. They don't matter.
It don't matter.
They don't matter. They don't matter. That's why I'm like, hey, quit sitting over there trying to Google and figure it out. Call somebody who really know what they're talking about.
I'm not paying it. Her boyfriend, all that together. And she was like, he not giving me the number. I'm not paying it.
And it depends on the dollar amount. But then this is where I'm like, hey, I promise y'all, so y'all may have to filter your clients you sent to me, because I'm gonna tell you exactly how the heck it is. Look, let me tell you something. I'm all about the money, but I'm not gonna have you wasting my time, real time, nobody's time doing this, because it's certain stuff you got to take action on. Either way, somewhere down the line, you did it. Then you knew you owed them people. Eventually, you're going to have to do something. Either you wait it out till they fall completely off, and that's going to be 7 to 10 years. Either you man up, woman up, and get it taken care of and be done with it. Because a lot of them, I have a few of them, and it really just, again, it depends on the status of it. Because I had a guy.
Find out if this is you?
On the credit report.
Yeah, see, just calm down. Hey, I'm trying to keep it professional.
You don't got to do that for us.
I'm like, look, tell them to calm like I do for real. When I do the financial planning thing, I'll pull.
You do a soft pull.
I'm gonna do a soft pull. I'm gonna pull I'll pull judgments, especially if they know they have them. That's why I'm like, hey, y'all quit trying to sit up here and lie.
Yeah.
And that was the bad part about people go out here. Oh, I got my credit score. You don't have somebody go out there and illegally fix your credit and got stuff off of there. Got people had their student loans taken off of there. But hey, let me tell you something. See that little thing that you call that social security number and them fingerprints, and you know when they take your footprint when you get in the hospital, when you first born, and they put it in the national database and it's attached and collected to you for the rest for everything. Like, yo, yeah, they got you. You ain't that ain't going nowhere. None. I was like, that is just the dumbest thing.
Your social security number is an account number. You want an account for the government.
You are there. Yes. I was like, all you did was move this. I'm like, if you'd have did better, because I just did a posted a video yesterday, and I had a lady was not on her stuff. It was not on there. I sent it through, but now I've actually been able to run those Cavers reports. At first, I didn't when it was just a couple months ago, probably early last year, and I wasn't able to run it. But now I can see it. If them student loans in default, and you have been in default, and she had paid and got some other ones caught up, but didn't know that them other ones was on there. She was like, "Hey, right, I didn't include all of them because you forgot all of them. You got to call and talk to the right people." But yeah, they get them out their credit reports, and it's only temporary. It's boosting your score, and what that's the bad part that people get so caught on. Oh, my credit score is. They just got no. That's not what when you buying getting a mortgage. They're not looking at the same thing they're looking for when they're gonna give you a credit card or what they're gonna give you for a car, because their car they come repo. That ain't no issue. That house, you know how much money and time and involvement it takes to get somebody foreclosed out of house. You know, that's a lot of money involved in there. So before you put that much risk into it, you know, or the possibility, that's why you had, you know, why it's so much harder to go through. That's why it's scrutinized. But I'm like, the credit report is just a basic entry to, hey, I may almost be ready to do this. That's all that is.
Hey, Matilda.
Yes.
All right. So what was the question about?
As a matter of fact,
you're trying to figure out
go do a loan application on the website.
What the next step is for you?
Just have them do a loan.
Yeah, so basically I went ahead and did my fingerprints, and then I finished all of my certificates, and I saw that I had to email them all my certificates and whatnot, my ID, I think. And I sent the email like I think maybe a week and a half ago, and I haven't like heard or gotten any email response back. I mean, I don't know if I should like call them. I mean, I also did like the application search, and it popped up with like a number beside it. I don't know if that's, I don't know like what the next step is basically, if that's what I need.
Yeah, no, I understand. Yeah, I would go ahead and reach. It doesn't hurt to call her.
No,
to call
All
her.
right.
2 years on
Yeah,
the job.
I would reach out to them and see what they say.
Okay.
As long as it's got 2 solid
All right.
years.
Did you enjoy the
All right. I'm sorry?
I said, did you enjoy the training today?
Of course. It was really nice hearing everything. Although like I didn't understand a lot of it, I did jot down a lot of things for the future.
Good. Yeah, you're gonna have to hear it a couple of times.
Yeah.
Yeah. All right. So let me know if you need anything.
I will. Thank you so
Talk to you
much.
later.
Bye.
Okay.
Talk about it. And then we'll go over it kind of.